All right, guys, and everybody, welcome back to InvestQ Live. It's been a little bit of time. I don't believe we've done a live stream for over, if I'm not mistaken, it's been about a week since the last live stream. Sorry about that, guys. I've been very busy, and for those of you that do know, if you know, you know, I have been doing a lot of things behind the scenes, and a lot of exciting things coming up in InvestQ that I can't talk about yet, but I'm very excited to happen in the future, in the near-term future. So today, I'm going to be discussing a little bit of different stuff compared to what we usually talk about. If you notice in the thumbnail for this specific live stream, you're going to be seeing that it's not just a broader market analysis. The main topic for today is actually a popular stock on my YouTube channel, which is none other than SEALSQ, ticker symbol LAES. And I know every time SEALSQ puts out any type of press release in the investor relations tab, most people, what they typically think is something along the lines of, oh, it's just another press release, nothing significant, or they're asking about where the revenue is specifically, and we're going to get more into that in a little bit. And another thing that I hear frequently is that management needs to stop talking and they actually need to start executing and show some real numbers on the financials. Excuse me, guys. So I understand why these comments are made. It's not necessarily just haters. It's people that are shareholders of the company and do have some level of frustration. And while nobody enjoys watching a stock go down, well, actually, if my long-term thesis isn't broken and I'm a shareholder of a company, I actually like it when it goes down because that just means I can buy at a discounted price. But many people don't like it when they see a stock that they personally own go down in value. They don't like to see that. So, and with that being the case, there's many people that don't necessarily enjoy watching their investment go down in value for many months or many years. And if you're one of the people that has owned SEALSQ, ticker symbol LAES, for any amount of time, there's really no way around the frustration or the fact that you need one specific skill set, and that's none other than patience. But something that I've tried to do within this entire investment is separate two different things. Those things that I'm talking about are mainly the stock price and the business. And those aren't necessarily the same thing. In fact, they're not the same thing at all, because the stock price itself can crash while the underlying business continues to improve quarter over quarter and year over year. Now, as I mentioned, a falling stock price, it doesn't necessarily automatically mean that the business is bad. That's not the case at all. And likewise, actually, surprising enough, even though that many casual investors specifically don't really care about the underlying business as long as they see the stock going up in value, that doesn't necessarily, when a stock goes up in value, that doesn't necessarily mean that the business is doing better. There's other factors in play that could inflate the value of a stock even when it's a bad business. So today, what I want to be doing with you guys together is I want to put emotions aside for a little while and actually walk through this press release, because after reading it a few different times, I don't think this announcement is really about today's revenue. What I think is that it's management trying to explain what they're building over the next 5 to 10 years. And whether they actually pull it off is not in the hands of us. It's totally on and is completely reliant on what it is management does. And execution absolutely still matters, and revenue matters as well. And eventually, these announcements have to show up in the financial statements. And this first one I'm going to be going over clearly does. So let's start off at the top, because we did have an announcement come out today. Now, what does the headline say? SEALSQ Corporation reports preliminary H1 2026 results, and revenue is up 120% for the fiscal year of 2026. So what does that mean? The forward guidance is absolutely reaffirmed. So let's go into the specific press release here. And looking at some of the numbers, you're seeing here that the actual revenue is of approximately $11 million, which, as you see here, has increased about 120% year over year, and the fact that the forward guidance has been reaffirmed. And on top of that, they're sitting on roughly $495 million in cash and short-term investments right here. As of June 30th, 2026, cash and short-term investments stand at approximately $495 million. So, why does that matter for the company? Because it gives them flexibility to continue investing. And another reason, in my opinion, why it matters is this is not just talking about an acquisition, expansion, or something about the CEO, Carlos Moreira, or management having some type of press conference. No, this is actually what investors have been looking for and have been asking for some type of improvement and some type of improvement with the financials actually showing validity. Now, right now, cash doesn't appear to be the immediate problem. Again, they got $495 million at the moment in cash and short-term investments. And even though that is the case, they still need to execute successfully. And what all this simply means is that they have resources available to continue building. And personally, I think that's an important distinction to make for you, because after reading this release several times, there are a few things that I did realize and that I realize right now. I don't actually think that management wrote this press release to tell investors they sold more chips. I don't think that at all. I actually think that they wrote it because they wanted investors to understand that they no longer see themselves as simply a semiconductor company. And honestly, that completely changed how I looked at today's announcement. Now, let's flip over to another article that came out. Not to another article, but to the next portion of what it is I want to talk about. And what I want to talk about is management. They now have a commercial pipeline that is exceeding, and let me find this for you. Let me see if I can find it. 225, right here. So right here, as you do see in the headlines, their pipeline is currently standing at $225 million all the way throughout the year 2029, and the company has reiterated its expectations of 50% to 100% revenue growth in fiscal year of 2026. Now, let's take a step back for a second. What do I want to make very clear to you guys? That does not mean, and a pipeline of opportunities is not the same as, the pipeline of opportunity is not necessarily revenue that's generated and realized right now. A pipeline is simply opportunities for what can be possible if the company executes. And some of those opportunities will become customers in the pipeline and some won't. That's just the nature of the game. But what you do have to realize that it's still useful because it gives investors an idea of the size of what management believes that they are pursuing. And right below that, you see that SEALSQ Quantum Fund, they have a target allocation of $200 million. Let me find that for you real quick. $200 million. Right here. They have a target allocation of $200 million. Now, take a step back for a second, guys. I want you to think about this. They're not talking about launching one product alone. That's not what they're doing. What they're talking about is deploying capital across an entire post-quantum ecosystem. And for those of you in the chat, feel free to hit the like and subscribe button and let me know what you think about SEALSQ. And yeah, sorry, I just wanted to give you guys that reminder. Now, where I'm trying to go at with this, specifically, they do have a different strategy compared to if they were just looking to launch one product. That would be a very different strategy. And personally, I think many investors originally assumed that was the case, but that doesn't necessarily appear to be the case right now. And another section that I want to point out is this ties a lot of the things together for me, because over the past year, you got to look at how many acquisitions have we talked about, such as IC Alps, Mirax, WeCan, you got Quobly, EroQ, Quantix Edge Security. And when you look at that at first glance, you do realize that some investors viewed these as random announcements. And people do like acquisitions, especially for companies that they hold. They like to see that. But people also like to see how it is that these acquisitions are funded and if these are actually good acquisitions. And if shareholders see that a company that they're investing in is making these random acquisitions that they don't agree with, it may make them view their acquisitions with a little more caution. Now, I think management, in my opinion, is intentionally trying to build different pieces of the same ecosystem. And some companies, they do specialize in semiconductor manufacturing, while others specialize in photonics, and others focus on secure infrastructures, and others also focus on quantum networking instead of just relying on one technology like some other companies do. Now, management, they appear to be assembling multiple technologies that all support one long-term objective. And again, that does not mean success is guaranteed. There's no guarantees in the stock market, and there's no guarantees in any stock that you hold shares of. But what's good about this is that at least now, I do think investors have a much clearer picture of why they've been so acquisition focused. Now, where today's announcement became really interesting to me is that I want you to imagine and take a step back for a second. Imagine that you're a institution. Imagine you're a big bank, or even a hospital, or some type of defense contractor, or maybe you're more along the lines of running critical infrastructure, maybe something like that. You already know quantum computing is advanced. You've already heard about it, and you're aware of that. And you've heard relatively about post-quantum cryptography. And the question that you would be having might not necessarily be, oh, whoopsie. I actually clicked something wrong. But anyways, without going on too much of a rant, the question that you might have might not necessarily be, which chip do I buy? The question, if I was to take an educated guess, the question that you most likely would be asking was, how do we even start preparing? Because that's where management believe they can enter the conversation. Not at the very end, but at the very beginning. Now, instead of simply saying something like, here's our hardware, what management is doing is it's basically describing an entire customer journey. Because first, they want to assess the customer's cybersecurity risks. Then they want to develop a migration roadmap, and they want to modernize their infrastructure and deploy secure hardware and continue certificate management. And they want to continue to identify management as well. Oh, sorry, guys, I had to stretch for a second. Now, personally, I do think that this is a much bigger opportunity than simply selling semiconductors. I do believe that. Now, another thing that I highlighted is this, or that I will highlight, is this section right here, and it's that management spends quite a bit of time talking about certifications. Here, let me show that to you. So you're going to see this right here. In SEALSQ, it's talking about in H1 2026, SEALSQ achieved key milestones that support commercialization. Now, again, all of these certifications right here. And what this tells me personally is that they're trying to move products from development stages into the actual deployment. And again, that does not mean that commercial success is guaranteed. But, and again, this is a big but, if you are buying technology for regulated industries like defense or other industries like healthcare, automotive, financial institutions, certifications absolutely matter. And customers generally are not going to deploy products without them. So seeing management continue making progress in this way is something that I'll definitely keep watching. And next thing that I want to talk about is regarding regulations, because sometimes investors do ask, why would companies even adopt post-quantum security? Management does have an argument that the answer isn't simply because they want to. It's also because governments and regulators are increasingly pushing organizations in that direction. NIST continues, sorry guys, my neck's a little tight, but NIST continues updating standards. And European regulators are doing the exact same thing, and critical infrastructure requirements continue evolving as well. And cybersecurity regulations continue becoming more demanding. So what management believes is that those trends could create long-term demand for their products. Now, will the expectations or the exact expectations that management has pan out exactly in that way? Nobody truly knows, but I do think that it is helpful understanding why management is investing so aggressively today. Now, I do want to cover more regarding SEALSQ, and I'm going to make a post for you tomorrow, but unfortunately I do got to go, guys. But real quick, just take a quick look at the heat map. I do see here that it appears to be a mixed bag. Technology, semiconductors, pretty mixed. And it does look to appear to be more of a risk-off day. Okay, interesting. So sorry, guys, I do got to go today. I'm going to be doing another live stream tomorrow a little bit early in the day. But with that being said, guys, David over here at InvestQ out. Stay safe. Keep making good decisions with your long-term portfolios. And I'll see you on the next video. Peace. Oh,